dude, guys, I understand that we all want to think that the market's going to crash, right? Everything in our okay, I mean, this is why it's so hard to guess what's going to happen in the stock market, because everything changes, you know? I mean, think about it. If I was a bear right now for the U.S. economy, right, I could have a long list. U.S. debt, $34 trillion and counting. Credit card debt, $1.3 trillion and counting. Revolving debt overall, consumer revolving debt, $3 trillion, right? Mid-East going on. Russia, Ukraine going on. Elections going on. High interest rates. Market all-time high, right? And if you look at social media, you feel like every single person is struggling to pay and is homeless right now. And while I'm not trying to discount people's struggles, I'm trying to let you know that that is a very vocal minority. It may not feel like it, but it's a vocal minority, okay? So I could continue to do this. PE ratio. You say, well, look at all the layoffs happening. That's a lot of reasons to think the economy's coming down. U.S. debt's $34 trillion. Yeah, but dollar valuation sinking, okay? Not internationally, but overall. So therefore, the debt is inconsequential right now because the devalue of the dollar is dropping the price. We're just printing off money to pay the interest, which just devalues dollar more. Credit card debt's at $1.3 trillion, right? But housing, equity, payments, non-default, and the option of buy now, pay later is just continuing to pump that. We haven't even seen what's going to happen with all the the student loan repayments. Revolving $3 trillion in credit, sure. That's a lot of credit card debt, and a lot of debt going on right now. But again, this is just the new norm, and banks are still lending. The Mideast crisis, okay, we've got that. Oil's a concern, but this isn't 1987. The U.S. said, we got an answer for that. We're going to pump out 13 million barrels per day. 1987, we weren't doing that. We weren't a net exporter like this. Sure, it'll affect oil prices, but it's not going to double oil prices overnight if there's an embargo in part of the Mideast. The U.S. will probably just up their output as well. So the U.S. is now becoming the number one as far as a nation of output right now. Starting up all our nuclear plants, which, by the way, guys, we talked about 2 days ago with Michigan and getting the government grant and keep an eye on uranium again. We played uranium this summer. Georgia just opened its new reactor. Funding for the Diablo Canyon in California. Michigan is going to restart its nuclear, and they're going to open 4 nuclear power plants in Ukraine at the end of this year, and Germany is starting to get theirs fired back up too. I really think nuclear is going to be our next step. We realize that, and we just found out that the UK has been lying about the output on their wind farms. We know that solar isn't there yet. We got to find some kind of renewable energy with a younger generation that's going to be voting. Nuclear is going to be the next one until the next meltdown. Russia. Oh, by the way, Mideast, not only that, but ceasefire is potentially being negotiated between Hamas and Israel. We saw tankers fall after that. Russia. Ukraine just got the funding. The EU bypassed Hungary, and Turkey's gotten out of the way with Sweden going into NATO. So this is just gonna have to peter itself out at some point. At this point, it's just going to be who has the most funding to keep things going. So we've already priced this in. Russia's sanctions on oil and natural gas have been over. They were making a load of money by selling cheap oil to India and China, but now that the U.S. is pushing so much into the market, people are like, well, you know what? We would potentially violate sanctions to save so much money on oil by buying directly from Russia. But now that oil prices have dropped so much because of the U.S., we might as well pay a little bit more to buy the U.S. backed oil and not, risk getting, any escalation out there. Elections, 50% of the world is going into elections this year, right? But nothing is potentially going to bring the world down. We know that Putin's going to get reelected. We know that those guys are all going to stay reelected. The U.S., even if Trump gets elected or whatever, the market will react, but it'll price it in quickly. Now, after the election and what gets put in place and what happens after that, that'll be different. But as far as just the election, markets don't go down in election years usually. Okay? High interest rate, 5.25% historically is not that high. It's because so many younger people are now, because of the internet and because of this kind of show and stuff, So many younger people are invested or involved in the market and understanding and learning finance, but this is the first time that they have been through a rate hike where they've actually been paying attention, because nobody paid attention to it 2008, right? 5.25% historically is low on a hiking cycle. Market all-time high. Back to the beginning, as long as the U.S. is printing money and the dollar's getting devalued, that just means that if there's more money, that buys more into equities, and the price continues to go high. Because how do you think the rich get richer, guys? Assets get inflated at or above the level of inflation. That's how people that have money and are smart with their money continue to make more money, while people who don't have money or don't understand about investing lose and fall further behind. Okay? If you have $1,000 today and you decide to put it in the S&P 500 and your friend decides to leave it in cash, even if you never add to that, in 10 years, at minimum, you're going to double your money. And so if inflation has devalued the dollar by 50%, you're still exactly where you are, but your friend has the equivalent of $500. That's why it's so important to invest. Even if you're only, that's why I tell you guys, it doesn't matter how much, it's about how much time. Even if you only decide to cut out one lunch a week, right? Okay, let me give you an example. The next person who says if young people just stop eating avocado toast and drinking Starbucks lattes, they'll be rich, is a fucking straw man idiot who has nothing better to do than pretend like they know something they don't. But at the same fucking time, there is truth to that. Because when I see people who budget, and I say, well, they're like, I can't get ahead. I said, send me your budget. And they send me their budget. I'm like, this is bullshit. Send me a breakdown from your bank of what you spent your money on. I can usually identify minimum between $100 and $1,000 a month in wasteful spending. But it doesn't sound like a lot. But even if you were to go out and, like I said, I got a challenge for people who are entrepreneurs or are business people or are wanting to change their life or do something different. Even if you're not even close to having a drinking problem, stop drinking alcohol for 30 days. Two things are going to happen. Number one, you're going to save a load of money. You're not going to go to the bar once or twice or 3 or 4 times a month, and you're going to save a couple $100, which then you put into the market every month. The next thing you know, you fucking compound like crazy. But more importantly, the next day you're not hungover, you're not dehydrated, you don't feel like shit. You're more likely to get up early, get to work, you're going to be more motivated, and whatever project or thing you're doing is going to be a hell of a lot better. You'll lose weight. Just 30 days. So you're going to save money, you're going to be more productive, all right? Then, see how much money you saved, and then take one weekend out or one Friday night off. With TheStockGuy, that's how I unwind. Find a better way to unwind, dude. There's a lot of things you could do. But either way, throw that money to your mortgage. Throw that. It compounds like crazy. So while it's not going to make you rich, the difference in disposable income 20, 30 years from now compounding is insane. Some of y'all order Uber Eats at work every single week, every single day at work. $20, $25, $100, $150 a week. $500 a month, that's $6,000 a year. That'll fund your entire Roth IRA. Invest in markets at all-time highs or stick to 4 to 5% fixed savings interest rate. Stock Guy, that's the conundrum. It's not really a conundrum because you are essentially saying, I don't want to put my money in a market that's all-time high, but I can remember there's people that said the same thing in 2015. Why not split it up? Why not have some of that money as access to liquidity with that 4 to 5%, but at the same time, also invest in equities, right? And you know what? Here's what I said. If you want to have a really good ROI on your money, but you don't want to invest in the market or gamble then use that extra money to pay down the principal on your mortgage. Because while you might be making 5 to 6 or 4 to 5% in cash accounts, you're making 4 to 5% off of a small amount, while you're losing 5 to 6% on $300,000 on the principal. Okay? Interest rates historically low. Market all-time high. Yeah, the market's driving because two things. Number one, dollar devaluation drives markets higher because there's more money in the system and there's a record amount of money going into the market because of retail traders. And number two, you've got outside money, just like the Roaring 20s. I'm not saying we're the same as the Roaring 20s, but part of the reason that our market went up so crazy in the Roaring 20s was because people outside the world, investors outside the world, decided to put their money in the U.S. markets, which drove more liquidity. Did you guys see the chart I posted this morning about China ETFs versus India ETFs? Last year, there was a $3 billion outflow from China ETFs, and that $3 billion went into India ETFs. Almost all of which went into INDA, which is the ETF that we bought into 2 years ago when we identified India as the next emerging market. But there's so many people that are moving their money into U.S. markets because just like after World War I, it was the best opportunity. Best market. PE ratios. Third time in history we've had a PE ratio this high. But again, price to earning only matters if you're focusing on the value of a dollar at any given point to future earnings. But if you're pricing in the fact that the dollar is going to devalue on continued printing, then price to earning ratio doesn't matter the same, because you're saying the price to earning, the price in dollars today versus future earnings. But if a dollar is going to be worth 25% less, then you can account for 25% more value on the PE ratio on today's dollar, because you're looking at it based on today, not accounting for that inflationary impact. Okay? And layoffs. What layoffs? There's layoffs, but people are getting hired, and average hourly earnings are going up, meaning people have more money, they're spending more, nobody's saving, and that doesn't account for doom spending, which I look forward in a decade from now, all the people that are doom spending looking back and saying, that was f***ing stupid. That's how people justify bubbles, Stocky? Justify bubbles? Sir, whether you justify it or you don't, you're living in one. And you get two options. Be the bear who's trying to time the bottom, which, by the way, 99% of all bearish bets have ended in zero over the past 25 years. Or you can ride the bubble and buy the dip when it bursts. There's legitimately, what are you going to do? We've been calling a bubble for 50 years. It retracts sometimes, but it never stops. The bubble is not going to burst until the US dollar is no longer the reserve currency of the world. When that happens, it doesn't matter about the stock market, your 401k. You got bigger problems than that. It'd be like, just for example, do you know that any given day the sun could send out a solar flare that could just fry the world? Wipe all fucking life off this planet? Every single day that could happen. And eventually it will happen. But do you walk around every day being like, oh my God, this could happen. Oh my God, oh my God, oh my God, this is going to happen. Oh my God, it could happen at any time. Oh my God, oh my God, oh my God. No. Yellowstone is due to blow. We've identified 5% of Earth-ending meteor or comets and meteorites or meteors in our solar system. 5%. 95% of life-ending meteors, comets, whatever you want to call them, haven't been identified. We're all living on borrowed time, buddy. But you can go out and live your life, or you can sit inside in anxiety and panic all the time. Solar flare that burns out life isn't really a thing. All electronics, yes. You're telling me that it's not possible for the sun to have a big enough solar flare to kill humans. Just because it hasn't happened doesn't mean it can't happen. No, I'm not fear-mongering. I'm explaining that this is the opposite of fear-mongering. You can't control that. You can try to stay away from it and say, well, I don't want to be in here because the bubble will burst. And then in 30 years, you've been left behind so far that you're just hating yourself. How many people in here wish they would have started investing earlier or investing more earlier? Everybody. Okay? Now, is the reason you didn't invest because either A, you didn't know about investing, B, you didn't have money, or C, you were worried about the risks? And then layoffs, jobs numbers. So all of this was to say that I don't really see a catalyst unless there's some unknown thing that happens for our markets to fall this year, because everybody's piling their money into our markets and our rates are staying high. And then we haven't even talked about the most important thing. Remember how I told you guys about the last person at the bar? I can't say a guy and women at the bar because we don't get to choose. We get chosen. But last call. She needs a D appointment. Okay, she's scrolling through her phone. You're the first one to answer the yo, you up text, or it's last call and you look around and you're not good looking, but you're better looking than everybody else. You just happen to be best at the time. So you're going home with her, okay? It's the same thing with the U.S. market right now. Look at our GDP. All the recession calls. We just had a revised down to 4.9% quarter growth, followed by this quarter of 3.3%. That's insane. That's insane. Whether you believe it or not, that's wild. That is the complete opposite of a recession. Most of that growth is government spending, isn't it? No, it's people spending money they either have from when we had our little UBI or whatever you want to call it during COVID, or people spending on credit card. Remember that $1.3 trillion in credit card debt? That went up by $300 billion in one quarter? Yo, Stocky, why do you look so old today?